In addition to credits that a person gets from medical aid contribution, SARS also makes provision for someone to be able to claim extra credits. And this is in a way of excess medical aid contributions and qualifying medical expenses. So excess medical expenses, usually it's calculating your excess medical contributions, is a formula based and depends on your age and whether you have a disability or not. And we're going to look at an example just in a few minutes. So qualifying medical expenses are also credits that you get for out-of-pocket expenses. So anything that your medical aid didn't cover, or maybe you've reached the maximum benefits that you have, and then your medical aid didn't cover those, providing that they are qualifying expenses that SARS allows. So where you have submitted these using your medical aid and these were not paid, these are going to show on your tax certificate. However, if you pay it from your pocket, then you're going to have to keep records just in case SARS wants to come and audit and see the proof of those expenses that you want to claim now. So specifically, out-of-pocket expenses that you get over the counter without a prescription don't qualify for qualifying expenses. So SARS has a criteria to say, okay, which are the expenses that qualify and which ones don't. So it's just always good to just keep records just in case SARS wants to audit it, and also just to familiarize yourself with what the website says of what's a qualifying expense and what's not. According to SARS, these are examples of what are qualifying expenses. These are consultation services and medication from a registered medical practitioner. These are care at a patient's home by a registered nurse, medication prescribed by a registered physician, admission to a registered hospital, nursing home, medical expenses or services rendered abroad that are in line with the above. So these are typically the expenses that SARS says these are qualifying expenses, and if they're out of pocket and are not covered by your medical aid, there could be circumstances where you can claim from SARS when you do your tax return. So these are the steps if you are under 65 and don't have a disability. So this is just what's on the screen right now, but we are going to look at examples just now for ease of reference, just to get you an understanding. And the reason why I do these videos actually is to just for information purposes. It's always a good idea to go and consult with an expert, a tax consultant, and they'll be able to do your taxes for you and give you better information. But these videos are just for information purposes only, so please do make sure you do your own research and also be in contact with SARS or a tax practitioner. So if we look at this example with someone who's under 65 without a disability, so it's Truly, and she earns 40,000 Rand a month and she contributes 4,000 Rand to a pension fund. Her family's contribution amounts to 75,000 a month for a family of 4. In 2024, the benefits that the medical scheme credit is 364 for the first 2 dependents, and then thereafter it is 246 for the subsequent dependents. So that's per month, right? So if we look at this example here, the first thing that you would have to do according to the steps is to say what is the medical contribution for. So for Trudy in this example, it's 7,500 for times 12, and so for the year it's going to be 90,000 Rand. And then the second step is to calculate what is the medical tax credit. So this is the standard credit that SARS gives a person who pays towards medical aid. And for Truly with her family of 4, it's 364 for the first 2 dependents plus 246 for the subsequent 2. And if you times that by 12, you get 14,640. So the next step is then to say 4 times the medical tax credit. So then you'll just take the 14,640 and then you times that by 4, and that will give you 58k. The next step after that is to say what does the contribution exceed this credit by. So you'll take your contribution of 90,000 Rand. So this is the contribution that Truly made towards a medical aid, and then you say minus the calculation that we did in step 3. So that's the 90,000 Rand minus the 58, and that will give her 31,440k. Number 5 is then what are Truly's unrecouped expenses. So her unrecouped expenses for this example is 20,000 Rand. So we'll say she paid 2,000 Rand per month. So you take that 2,000 Rand times 10. right? Then step 6 is to add step 4 and 5. So step 4 was the contributions exceeding the tax credit. So we got a number of 31K. And then step 5 is the total unrecouped expenses. So if you add the 31K and the 20K, it gives you the 51K. After that, you have to say what is the taxable income after deductions. So Thuli's taxable income is the following. So she earns 40,000 Rand a month. So you take the 40,000 times 12 and then minus the 4,000 Rand which she pays towards her pension. You times that by 12 and that will give you 432K. So then her taxable income after deduction is 7.5 of that taxable income, which is the 32,000 Rand. Step 8 then says that the allowed contributions plus the additional expenses less the 7.5%. So that will be the 51,000 that we got from step 6 minus the 32 that we have from step 7. And so therefore, according to step 9, it's a whole formula, but I'm hoping that this example makes it a bit easier. Step 9 will then be to say 25% of that, of the 19,000 that we have in step 8, will then be 4,760. What this example is saying is that Thuli is entitled to a rebate against her income for medical expenses is the normal tax contribution that SARS allows. So that's that 14,000. So remember, it's for this year it is a 364 for 2 people, and then subsequently it is the 246. Right after that for every month. So that for Thuli it is 14,000 Rand plus the excess medical expenses, which we've calculated from this formula, is the 4,000 Rand. So her total would then be that 14,000 that SARS allows, the ordinary one, plus the excess medical tax contribution, which will give you the 19,000 Rand. So for this example, what we're just trying to say is that there are situations where SARS will allow, besides the rebate, the tax credit that they already give people, there are circumstances where they allow additional medical expenses to be deducted. So this example is to say, how then do I qualify if I'm a person who's under 65 and I don't have a disability and I've got excess medical expenses that I have? How do I calculate it? So this is what this example is for, right? So these are the steps if you are over 65 without a disability. So if we look at an example for this, it says Thuli, who's age 66 and her spouse is 64 and paying 4,000 Rand a month to belong to a medical scheme, right? They have paid 17,000 expenses out of pocket. And then the medical scheme fees credit for the year for 2024 is the 364 times for 2 people for 12 months, that's per month. And then it is 246 for subsequent members for 12 months. So that is the ordinary tax credit that SARS allow. So we want to see, does Thuli, who is over 65 without a disability, qualify for additional tax credit? So if we look at this example, the first thing that you have to do in this step is to calculate the medical contribution. So her medical contribution is the 4,000 Rand that she pays every month towards the medical scheme times 12. So she pays 48,000 Rand for the year towards her medical aid. Okay. The next step is to calculate the ordinary tax credit. So it is then 2 members. So it's the 365 for 2 people times 12 for the year. And for her and her husband, it is 8,736 Rand. Then it says the next step is to say, what is this medical tax credit times 3? So you're going to take your medical tax credit that's allowed by SARS times 3. So that's the 8K times 3. And for in this situation, we get 26,000 Rand. After that, it says, based on the contribution that Thuli made towards the medical aid, minus this tax credit times 3 calculation that we've just done, what is the difference? So if we take the 48,000 Rand that Tuli pays for the year, and then we minus that by the 26,000 Rand, which is her tax credit that's allowed by SARS times 3, it gives us 21,000 K in this example. So then in step 5, these are just unrecouped expenses, and let's say her unrecouped expenses are 38,000 Rand. Okay, you take that and you times that by 33.3%. So that will give you 12,000 Rand. So this will mean that Tuli will be entitled to 12,000 Rand. So that's the calculation that we did to say, plus the medical tax credit that she already is allowed, that table, that 364 times for 2 people for 12 months, and then 246 subsequently for other members for the whole year. What can she claim additional for her unrecouped expenses? And we've calculated here that she can claim 12,000 Rand in addition to the tax credit that SARS already allows, the medical aid contributions. So if you are under 65 with a disability, it's good, or for you or a dependent of yours, you can also claim additional expenses, right? SARS has the guidelines on how to determine if someone has a disability. So it's always just wise to then just phone SARS or call the tax practitioner and say, just to make sure that whatever you're trying to claim, you're allowed to claim. But in brief, what it's saying a disability is, it's a moderate or severe limitation of a person's ability to function or perform daily activities as a result of physical, sensory, communication, intellectual, or mental impairment. All right. So it also gives you examples of that. So some of the examples are private nursing or home care, travel and transportation, relating to that, insurance, maintenance, and so forth. So before you claim for disability, just make sure that you've done your research and you know if you're allowed to claim for that. Also, for claiming for disability, a taxpayer will need to ensure that their medical practitioner completes the ITRDD form, and also to keep in mind that expenses will not automatically be treated as qualifying expenses, and it must be proven to result in a person's inability to perform daily functions. So if you're not able to perform daily functions and you meet the definition or the guidelines of what SARS says is a disability, and your medical practitioner completes that form, you may be able to claim additional benefits or additional tax credits. And you should also have the following when you claim, so that if SARS says, okay, we want to order this deduction, you have that information readily available. So that's things like detail the nature of physical ability, the evidence that the expenditure was a result of the disability and that it was inevitable, the completed ITRDD confirmation of diagnosis, disability form, and then proof of payment for treatment, consultation, and medication. So you have to have these type of documents in hand when you're making a claim, so that should you be selected for an audit, you have that to prove to SARS. Okay, so these are the steps for someone who has a disability. So if you are under 65 with or without a disability, this also applies to you. So in this example, Jabu is paying 10,000 Rand a month to a medical scheme with a spouse and a child registered as a dependent, and his child is disabled, using a wheelchair, and attends a special school. So remember that the medical scheme tax credits ordinarily is 364 for 2 people for the whole year, and it is 246 for subsequent members. So there's 3 people in this equation. It's Jabu and his wife, and also his child. So that's 3 people. So the first thing to do, he has to calculate Jabu's contribution. So his contributions are 10,000 Rand a month, so that's 120K for the year. And then the second step is to calculate what is the medical tax credit. So that is 364 for 2 people plus the 246 for his child for the whole year will give us 11,000 Rand. And then step 3 is to take that amount and you times that by 3. So it is 3 times the medical tax credit. So this is a tax credit that SARS allows, 3 times of that. So if we take the 11,000 Rand, times that by 3, it will give us the 35K. Okay, then step 4 says his contribution that is made to the medical aid fund minus this formula that we've calculated, this tax credit times 3 formula that we've calculated. So if we take his contribution towards the medical aid, because he pays 10,000 Rand for his family every month, it's 120,000 Rand minus this calculation that we've done is 35,000 Rand, and then the amount that we get is 84K. So Jabu's unrecouped expenses are 25,000 Rand. Say these are expenses that he paid out of pocket, and for the child, his child's disability, it is 74,000 Rand. So in this example, if we take those three, so what he's paid out of pocket, what's relating to his child expenses, and add that to the calculation that we've just done now, it gives us a number of 184K. So that's that 84,000 Rand, 25,000 Rand, and then the 74,000 Rand added together. Then number 6 is what is the allowable additional tax credit. So in addition to what SARS already allows, what can Jabu claim because of his circumstances? Okay, so we take the 184,000 Rand that we've just calculated and we times that by 33.3%, so a third of that amount, and that will give him 61,000 Rand. So Jabu can claim, in addition to his actual contributions tax credit that SARS allows him, he can claim a total of 73,000 Rand. So that's that 11,000 Rand that we did in step 2 plus the 61,000 Rand because of his circumstances, and he can claim an amount of 73,000 Rand on his tax return for 2024. So these are the tax contributions that SARS allows for the 2024 tax year, right? So for the main member, it's 364. We've done some examples where we've seen that. And then for the first dependent, it's also 364. Then any additional dependent after that, you can get a deduction of 246 Rand. And this is per month. So to calculate this, this will already have been done if you are working for an employer. But just to familiarize yourself with what is allowed by SARS. So these are the tax credits that are allowed for 2024. Your medical aid will probably send you your tax certificate, and you'll be able to see your costs for the year. You'll also be able to see any out-of-pocket expenses that were not paid by the medical aid. This can also help you to claim additional credits if you qualify. If you're employed and your medical aid contributions are paid by a payroll, then your employer may use the tax credits to reduce your monthly payments. So they may actually do that for you when they pay you and provide and do that deduction before they pay you. This will affect, so these medical tax credit affects both the employer and the employee. The credit must be taken into account by the employer when calculating a person's employee taxes, and then also to be deducted or withheld from the person's salary. If you pay in your own personal capacity, then you'll be able to claim these tax refunds when you do your tax return. So if you do your own taxes yourself, you'll be able to then make the contributions for the year, and then when you're now doing your tax return, you can then make the claim, like the claims for the tax credits, and then submit your tax return that way. And it's also important to know that tax rebates are only applicable for members who are members of a registered medical aid scheme in South Africa, and also qualified dependents listed by SARS. So SARS does provide guidelines on these, and these include a spouse, they include children, they include parents, siblings, parents-in-laws or grandparents who rely on you financially, and then also any other person recognized as a dependent on the medical aid scheme. So to find out who a dependent is, SARS also provides guidance on that. Thank you guys for watching this video. I hope it was very helpful. I'm going to be doing another one now about travel allowances. So if that's of interest to you, please do keep tuned, and thank you so much for watching, and bye.